With the recent news that the Fed pivot will be coming, inflation is under control, and rate cuts will be starting next year, this may very well be the confirmation that we're moving from risk off to risk on. Now, even though 2023 has been a year filled with fear, uncertainty, and doubt, Bitcoin has crushed it, gaining 160%, beating every other major asset class. However, what's even more important is what happens next. Is Bitcoin and crypto still going to lead the pack in 2024? Well, Michael Saylor, one of Bitcoin's biggest whales, has spent over 10,000 hours on that subject. And recently, he's put together a presentation with all his latest thoughts and analysis to help educate the masses on what is going on. And so, in this video, I'll be covering my biggest takeaways from that presentation, including the hidden problem that everyone is facing right now, the best solutions people have for building wealth, and the biggest trap that people fall into, and then why Bitcoin is set to be a huge winner, doing a 30x from today's price. Okay, so first up, step one is understanding the $900 trillion battleground and the different vehicles we all have for building wealth. And so, starting with the $900 trillion battleground and the main places where people are storing their money to build and maintain their wealth. So the biggest ones, we have real estate being over 300 trillion. We've got the global bond market over 300 trillion. We've got money being over 100 trillion. Equities also is a $100 trillion market. Then collectibles being 6 trillion, art being almost 20 trillion, gold being 12 trillion. And then this is pretty much where Bitcoin is right now. In fact, it is a little bigger, sitting closer to 800 billion. But as you can see, in comparison to the other major asset classes, Bitcoin is still really, really small. And as we move further into this digital economy, how much market share is Bitcoin going to take from the other asset classes? Okay, now we move on to the biggest problem we're all facing and why we must invest these days. And the hidden tax that is stealing our wealth is inflation. And I'm sure probably most people watching this video will have seen this or a very similar chart. And this is just the purchasing power of the US dollar. And this chart is going back to about 1900 all the way to 2020, and essentially it's just saying that due to inflation, the purchasing power of cash is slowly getting eroded away, and this $26 would now be worth $1 in today's money. And this is why people like Ray Dalio will say cash is trash, because just having money in the bank is not a way to store your wealth, as it's slowly being taken away from you. However, what's even more important to show is that yes, you may have seen this on the US dollar, but there's over 200 countries in the world. The US dollar is not the only one, so probably what you've not seen is this. And this is just a handful of other currencies, this one being the Indian rupee. We've got the currency from Brazil, Pakistan, Turkey, and Argentina. And this is showing that these are losing value against the dollar. So not only is the dollar crashing over time, people in countries all around the world, their currencies are crashing even faster. So in fact, the US dollar in comparison is a great place to be. So getting out of fiat currency is even more important in other countries around the world. Just something to bear in mind. So what does this do? Well, it forces us to invest. So here's a great chart, and it shows the different places that we can park our money to try and build and maintain our wealth. And it's showing two main things. We have consumer inflation. This is the CPI and the Fed's target of around 2%. But I think we all know that due to monetary inflation, you actually need to be making over 8% just to maintain your wealth. And if your capital is making less than 8%, then you're actually getting poorer. So what's he showing here? Well, we have REITs, real estate investment trusts. We've got emerging market stocks. We've got small cap stocks, high yielding stocks, the S&P 500, the 60-40 portfolio, 40-60 portfolio, developed market stocks, bonds, homes, the average investor, which gets about 3%. Then we've got inflation, cash, and commodities. And what it's showing here is that it's only really real estate investment trusts and emerging markets that's actually outpaced monetary inflation. And so a couple of things, we always need to check the date range, because depending on the date range you choose, it completely changes the data. So this is 2001 to 2020. And I think Michael Saylor's trying to make a point here. However, there are two categories that have been left off. One being tech stocks, and then just have a think, what is the other major asset class which he's left off? If we're talking about a store of value, then he should have included one other thing, right? Have a think. Well, did you guess it's gold? Why has he not included gold? So let's take a look at tech stocks and gold. First up, this is the NASDAQ 100 QQQ ETF, and I think he didn't include tech stocks because from the year 2000 to now, tech stocks have done amazingly well to the tune of 800%. So tech stocks also has beaten inflation. Just bear that in mind. And then why didn't he include gold? Well, for the price range that he took, 2001, as you can see, this was an amazing couple of decades for gold. And in this cherry-picked time period, gold would have also beaten inflation, which is why he probably didn't include it. However, gold isn't the holy grail asset class it may appear to be, as if you look at the previous 20-year period, then gold actually didn't even go sideways, it went down for 20 years. And this is why time frame is so important. And although, yes, there are time periods when gold is one of the best performers, which unfortunately didn't suit Michael Saylor's chart, it doesn't always do that. So now we know that it's pretty much tech stocks, some real estate investment trusts, and obviously Bitcoin and crypto that's outperformed. There's one big point that he always points out, and it's a trap that many investors fall into. And what 100 years of stock market investing data has shown is that if you try and time the market and buy a little here, sell a little here, in the daily swings that we all see, the ups and the downs, it feels like if we just buy and sell a little bit, we can avoid the big crashes and take advantage of the big runs. But what the data shows is that if you try and time the market yourself, for the retail investor, the average investor, 99% of people will lose money. And if you remember, this is why the average investor gets about 3%. So the big message is to hold and don't try and trade. And this chart basically shows that pretty much nothing really happens 99% of the time. So just holding the S&P 500 index fund gets you about 8%. And if you just miss or mess up a couple of the days, your results get cut in half. And I think it's a great strategy to use the lessons of 100 years of the stock market and apply it to crypto, because human psychology and patterns do not change. Now, there are three big catalysts coming very soon that are destined to send Bitcoin and crypto's prices to the moon, and that is FASB's adoption of fair value accounting. And we just had confirmation of this in the last couple of days, that this is happening at the end of 2024. And it just means that it'll make it really easy for corporations to put Bitcoin on the corporate balance sheet. Now, unless you've been living under a rock, then you will have heard about the Bitcoin spot ETFs and their approvals that are set to happen most likely in January. And obviously this opens the doors to trillions of dollars of potential new capital. And then in April, we also have the Bitcoin halving event, cutting the new supply of Bitcoin in half. And all things being equal, this should double the price of Bitcoin. So three huge things coming in 2024. Now, this is where we get this 30x from. And he says that Bitcoin is going to be like a black hole that sucks up capital from all the other major asset classes. And first on the hit list is going to be gold, which has a $12 trillion market. So Bitcoin is said to be gold 2.0 or digital gold, as it can pretty much do the same thing, but it's kind of better in every category. Yes, you can't just print more gold, but then more gold can still be discovered. It's very difficult to move $1 billion of gold from one side of the planet to the other side. You have the hassle of storing gold. Storing $1 billion worth of gold is not easy, etc., etc. And this is why he says Bitcoin will be taking gold's market share. And by doing that, it's going to grow the price by 30 times. And if that wasn't big enough, he's saying that Bitcoin's full potential, where it can take $200 trillion off the global markets, and remember, the global markets we saw was 900 trillion, so 200 trillion off the 900, and this is where you'll get a 500x potential for Bitcoin. And I was tempted to put Bitcoin to grow by 500x on the title and thumbnail of this video. However, let's do a 30x first, and then we'll talk about 500. But essentially, all he's saying is that there is a lot of room to grow for Bitcoin. Now, his summary is: no country can stop inflation. Most companies cannot outgrow inflation. Most workers cannot outwork inflation, and few can beat the market by skill or luck. But everyone can buy Bitcoin. And this is why he says Bitcoin is the new apex property. And a lot of times we have to watch what people do, not what they say. But in Michael Saylor's defense, he is pretty much doing exactly what he's telling people to do. First buying in 2020, and he was buying all the way up. And if you feel bad about buying at the top or near the top, Michael Saylor also did the same thing, buying a couple of times close to 60,000. However, just consistently dollar cost averaging all the way down. He even managed to hit the absolute bottom and has been buying all the way up. So his average price is about $30,000, and obviously with the recent pump, he's now well into profit and is currently making about $2 billion of profit. And what's exciting is that Bitcoin and many of the top cryptos are still down 30, 40, 50, 60% from the all-time highs. So we are all still really, really early. And so that was the full highlights from Michael Saylor's latest presentation. Essentially, the only reason that we must invest is because of inflation. However, it's an illusion that many of the top asset classes actually build your wealth. If your assets go up by 10%, but then everything around you that you buy goes up 10%, then you're actually staying where you are. And it's an illusion that you're building wealth. And in the last 20 years, it's only been tech stocks and crypto that's actually outpaced inflation, and that has actually made you wealthier. And this is why Michael Saylor says that Bitcoin is where you want to be, and why it will be like a black hole sucking up capital from every other major asset class as the rest of the world finally wakes up to what is going on. So there you are, guys. Hope you enjoyed. Now tell me, what do you think about Michael Saylor's prediction? Will Bitcoin do a 30x or even a 500x? Let me know below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.